For decades, market participants have called copper Dr. Copper, as it diagnoses the health and well-being of the global economy. Over the past years, Chinese infrastructure building has made China the demand side of the red non-ferrous metals fundamental equation. Copper's price has been in a bull market since trading to a low of $2.0595 per pound in March 2020 as the global financial crisis gripped markets across all asset classes. In May 2021, the price eclipsed the 2011 record peak and rose to $4.8985 on the nearby COMEX copper futures contract. After a correction that briefly took the price below $4 in August 2021, copper was trading above $4.54 on January 20. In early 2022, copper has been volatile, with the range on the nearby March futures contract from $4.3135 to $4.6010 per pound. Copper remains in bullish mode and looks set to continue over the coming weeks and months with high odds of moving to higher highs. An initial surge higher in early 2022 fails. The nearby March COMEX copper futures contract closed at $4.4635 on December 31, 2021. The chart shows the March futures price has traded from a low of $4.3135 on January 6 to a high of $4.6010 on January 12 and was at the $4.4315 level on January 20. Meanwhile, copper futures have made higher lows since August 2021 and higher highs since mid-November. The initial surge to the $4.60 level on January 12 failed, but copper remains in an overall bullish trend and the price has crept back to near the high on January 20. Copper remains within striking distance of the 2021 all-time high. Dating back to the 1960s, COMEX copper futures did not trade above the 1988 $1.6475 high until 2005. After reaching an all-time high in 2011 at $4.6495 per pound, the price dropped to below $2 in early 2016. The long-term chart highlights the March 2020 low that took copper to a higher low than in 2016 at $2.0595 before it exploded higher, eclipsing the 2011 record peak and reaching $4.8985 per pound in March 2021. At over the $4.40 level on January 20, copper remained within striking distance of the 2021 all-time high. The price action on January 12 that took copper from $4.42 to just over $4.60 per pound shows how quickly copper could return to challenge the May 2021 high and overtake the level. Demand for the new oil will rise over the coming years. Goldman Sachs called copper the new oil in April 2021, saying in a report that decarbonization does not occur without massive copper supplies. Copper is a critical component of EVs, wind turbines, and other alternative and renewable energy initiatives. Goldman cited increased demand as why LME 3-month forward copper will rise to the $15,000 per ton level by 2025. Aside from its use in the greener energy initiatives, infrastructure building in China, the rising demand for new homes in the US, and a substantial U.S. infrastructure rebuilding program will require a lot more copper over the coming years. 3 reasons why supplies will struggle to keep up with requirements. 3 compelling factors tell us that copper supplies will not keep up with the growing demand. It takes 8 to 10 years to bring a new copper-producing project online. The leading copper producers are scouring the planet, looking for new mines. BHP is considering projects in the politically challenging Democratic Republic of Congo. Over the coming years, new supplies will not be available to meet the increasing demand. Chile, the world's leading copper-producing country, recently elected a socialist president. Renewed support for higher union wages, the potential for mine nationalization, and a potential for increased royalties from foreign mining companies producing copper within Chile's borders could weigh on output and increase production costs, putting upside pressure on the red metals price. Other South American and worldwide copper-producing countries could follow Chile's lead. Peruvian and Indonesian mines may see additional price pressure on the back of Chile's socialist approach to guarding the nation's wealth. Falling or steady supplies in a world where demand is skyrocketing creates a potential bullish cocktail for the copper market. Copper could rally by 50% or more from the current price level. A $15,000 per ton target for copper translates to over $6.80 per pound for the nearby COMEX copper contract. At the $4.55 level on January 20, a move to Goldman Sachs's target would equal a 49.5% price increase. Meanwhile, some analysts are calling for even higher prices. In the world of commodities, bull markets created by supply/demand imbalances tend to move to prices far above levels dictated by logical, reason, and rational analysis. The bottom line is that technical and fundamental trends in the copper market point to much higher prices over the coming months and years. The optimal approach to the copper market is likely to be buying during periods of price weakness. $4.40 per pound may seem like a very low price over the coming years. Rising global inflationary pressures only add to the bullish case for the non-ferrous metal. Moreover, copper is the leader of the other base metals that trade on the world's oldest metals exchange, the London Metals Exchange. Higher aluminum, nickel, lead, zinc, and tin prices are likely on the horizon, as the metals are also critical green energy components and will likely follow copper like obedient puppies. The trend is always your best friend in all markets. When supply and demand fundamentals line up with the trend, watch out, as the price action can become explosive. The increased price volatility during January 2022 could be the tip of the iceberg for this year.